This pattern I'm about to show you could have significant implications for overall market direction. Welcome back, cool cats. We're going to do a real quick big picture before we get into the market analysis. As you probably know, Biden dropped out of the race and endorsed Kamala Harris. We won't know how the market likes the news until tomorrow, but so far, at least BTC doesn't seem to be hating it, and it adds a new confirmed element of uncertainty to the markets. And then you've got the potentially lasting effects of CrowdStrike, although it's also possible that negative catalyst is done and over with, considering the market has the attention span of a fly. So looking at Moomoo's earnings calendar, we've got Verizon out Monday that's reporting earnings before the bell. We've got Google, Tesla, and Visa reporting earnings after the bell on Tuesday. And then on Wednesday, we've got AT&T reporting after the bell. So looking at investing.com, we've got all of our key economic catalysts for the week. Some of them are more important than others. Of course, we got PMI coming out. Durable goods, GDP is going to be a big one to see what's going on with the overall economy. Initial jobless claims, I know the market's probably wanting to see that a little bit higher than expected because they're wanting the Fed to cut. But you know what, if they're starting to price in the recession, then maybe they don't want to see this as being a higher number. And then the biggest one is the core PCE, which is the Fed's preferred inflation gauge. If this comes in lower than expected, I have to wonder if we might even see a rate cut starting in July. Right now the market is pricing in an almost certain chance of a Fed rate cut in September. But if they decided to cut in July, I think that would send a massive warning signal to the markets that something has broken. So on the SPY S&P 500 ETF on the 2-hour time frame, we have this very well-defined descending channel. We've got a bit of bullish divergence that's forming right now and possible descending wedge, and this is the target if this breaks out. It depends on whether or not this is actually a descending support line, and we won't know until we see further price action. But this is the lower support line of the much bigger rising wedge pattern that we've been going over. And we want to see if this is going to break. If this doesn't break, the market could actually continue going on up and even making new all-time highs. But if it does break, we know where this pattern target is heading to. And if we look at the 4-hour here, we've got something of a bit of an inverted head and shoulders pattern on the RSI that could be forming. I know it's kind of ugly and it may not actually be that. We need some more price action to confirm, but if it is, we could potentially see a breakout of this falling wedge pattern. And quickly hopping over to the futures so we can see the levels over here. We're going to look for a possible bounce around 54.90 on the futures, and the breakout target for that would be about 55.70 minimum. Of course, on SPY, it was around 552 minimum. If this continues up, if this acts as a main support and we don't get the breakdown here, we could see this continue on up until we hit this resistance line again, and we could see just coiling, going up and up and up and up and down and down and down, back and forth until we finally get the breakdown. If you think the market is about to pull a 180 and rip the faces off the bears, let me know by tapping that like button. Or if you think this is the beginning of a much bigger sell-off, I'd love to hear your thoughts in the comments below. And if we take a look at the Dixie, the dollar strength index, this falling wedge pattern is still in play, nowhere near completing its pattern target. And the daily RSI has so much more room to run. We're still above this key support level. And if this price action continues on, we may end up seeing kind of an ugly inverted head and shoulders, even on the RSI on the daily for this. And like we've been following along on the VIX, we had this wedge pattern and breakout. We've met that pattern target. And on the TTM squeeze, we can see we've had a breakout in volatility on the daily. But when we take a look at the weekly, this is still indicating a squeeze in volatility, which means that this could continue running. And then if we zoom all the way out to the monthly, and we've got the RSI up here, we can see a bit of a divergence here. From the high to the low, this is sloping down. This is sloping up. A lot of times what you see, this is called a hidden bearish divergence. A lot of times what happens is the RSI comes up higher than the first point, gets a pullback, and then creates a bullish divergence and then heads even higher. So it's adding more confidence to the thought that the VIX could continue breaking out. I usually don't pay too close attention to the IWM, but I think I need to start. This pattern I'm about to show you could have significant implications for overall market direction. Check this out. So this is something I had overlooked before, but we had a symmetrical triangle pattern on the IWM with the breakout, and we've actually met that pattern target. And if you zoom out even further, you can see this actually ran up into this big supply zone, and we got a big pullback off of that. I mean, you could even say that that's particularly like a sell-off. And so many are assuming that the breakout in small caps is rotation out of big tech. And even I was beginning to believe that. But now the question arises, is this actually market rotation, or is something else entirely going on? If this was just a technical breakout, what could that be indicating? And so if the market comes back and retests this roughly 212 area and create support off of that and bounces off of it, then we could continue to see higher highs off of this. But if it breaks below that, then that's an indication that this was literally just a technical breakout, and then the overall market actually could continue lower. So we had two requested tickers. First up is Goldman Sachs. You can see on the weekly time frame, we had essentially a giant double bottom off of this big demand zone and finally broke through this previous strong resistance zone. When we zoom into the 4-hour time frame, we can see that we had this inverted head and shoulders pattern with the neckline here. This was the pattern target for the breakout. We got an initial breakout, we got a retest, and we fulfilled that pattern target. It actually went above it a little bit, but right now it's looking like it's wanting to come back and test this previous resistance and see if it's going to act as support. And I think adding to that idea is the fact that on the daily, the RSI has plenty of room to fall before we actually see a bounce. I had a requested update on Intel, so we're looking at this just kind of bigger picture on the weekly time frame. We can see we had this bearish divergence here previously, a bullish divergence here in the breakout, and we're in this symmetrical triangle pattern here on the weekly. So technically speaking, Intel could come all the way up to, I mean, like $48 a share if we see a pullback and then a higher low. That could act as support and break out further up to the upside. Now what's crazy is the breakout targets for this big symmetrical triangle. If we broke out to the upside, and of course this is going to take many weeks, we're targeting around like $77, $78 a share. But if we were to break down to the downside, we're basically targeting bankruptcy, because this target, again, this is all on a log scale. This is targeting like basically $1 a share. So let's hope that that doesn't happen for Intel. And you know what they say, a comment a day keeps the trolls away. So please drop one below with the ticker of your choice so I can perform analysis on up to 3 from each video and share it in the next one. If you go ahead and tap that subscribe and notification bell, you won't miss it. And then check out today's trading rule to live by. Best of luck, cool cats.